Welcome to the channel, everyone. My name is Nick. For those that are new to the channel, hopefully by the end of this video, you do become a subscriber. So the overall crypto market has been pretty bearish over the last couple months. Now, is it just crypto? Absolutely not. We know stocks have been getting, hit every single trading week ever since we go back to like January, for an example, when the trade war officially began. And those tariff discussions only heated up more and more and more. We are now 24 hours away from Liberation Day, aka what Trump is calling April 2nd, where we do see a very big update on tariffs. Now, while we do anticipate April 2nd, everyone and most of the, retail sector is very bearish on this day because so far, all of the tariff discussions that we have witnessed led to a sea of red. Now, is today different? Do we have any signals to go off of? Is there any indicators telling us that we should be thinking anything other than bearish? Well, let's actually look into that. So number one, we have Jim Cramer, the inverse indicator, right? Whatever Jim is saying, technically the opposite is going to happen. Now, he said on the 31st on CNBC, I can't think of a dumber day to buy stocks than today. Now, again, this is because we are in a new week, number one, but we're marching into April 2nd. And we're also, this entire week, there's so many huge financial events happening this week where we could see extreme volatility. But again, if Jim is bearish, that typically means that we should be looking to be bullish. Now, I have, I've told you guys many times over that we are in a bull market. We are just witnessing a bearish correction within the bull market. Now, the main reason why I still believe so is because of how bearish these markets already are at, even though the price action is still holding major trends. We are still looking very good historically, especially when you zoom out. But on top of that, we're starting to see the very bearish post happening around stocks, specifically the Mag 7. We have here that the Magnificent 7 has officially entered a bear market after falling more than 20% from the peak. So we're officially now in bear market territory because the uptrend here going all the way back to like October of 2023 has been lost. But the issue here is that, we've witnessed corrections like this previously before massive impulses. I think everyone is calling this way too early. I think that right now, most of the market, specifically like all of the mainstream media outlets that are looking at the market, the analysts that are looking at the market, almost everyone is extremely bearish. This is exactly what we want to see. The market is doing its job. But on top of that, Goldman Sachs raises its 12-month recession probability. I included this in a video just from the other day. From 20% to 35%. Now the recession odds this year are up over 40+%. This is crazy. Now, if you go back to like October or like even September, those recession odds were actually up over 50+%, which is telling us that retail really has no idea what they're even talking about with these recession odds. Now, one analyst that continues to be very bullish. Now, again, granted, he has been very bullish for years now, is Tom Lee. So we have over here from Scott Melker, Fundstrat co-founder Tom Lee says now is a good time to be stacking Bitcoin. Now, my focus isn't really on Bitcoin. It's more so about what's happening around the environment of crypto. Because what's good for Bitcoin is good for altcoins as well. So if now is a good time to be stacking Bitcoin, well, it's also technically a good time to be looking into, additional opportunities in the space, aka altcoins. But check this out.
Tom Lee is head of research at Fundstrat and chief investment officer of Fundstrat Capital, as well as a CNBC contributor. At the time, I think you were talking about some of the people that work in your shop, too, some of the technical people, and you were of the view that we were at least close to making a bottom. And off camera, we were talking, I said, maybe in terms of timing, it was about a month early, but in terms of how far the markets actually went down, you're not off by that much. I think the S&P was down about 6%. Now, looks like it's going to be, if it opens where it is right now, it'll be in correction territory again, down 10. But you have the same kind of feeling for this week that some of the underpinnings are in for a real bottom, for a tradable bottom or a real bottom?
Yeah, I mean, both. I mean, obviously, it doesn't feel this way because over the weekend, futures came under pressure, but we know markets are really oversold. We know that investors have had a lot of de-risking. And this week, I think, into April 2nd, investors have three things on their minds. One is they just don't know what the tariffs look like. They don't know if it's going to damage the economy. And I think third, many are just a little terrified of the policies of the White House. But post-Wednesday, I think markets are going to have some visibility, and that allows us to take some of the selling pressure off. So, yes, I think it's possible that instead of us breaking down here and seeing markets under further pressure, we're actually got the right pieces for a bottom.
Buy, though, into this without knowing what's on the other side of it? That is the fundamental question that people are sitting around trying to figure out today and tomorrow.
That's right. It's an interminable wait for people because it is still 3 days, and they're fearful that we could have 3 days of down 2%. But I kind of agree with Larry Fink. I think the U.S. is going to come out of this okay. I mean, Brexit's an example. Brexit happened, and the U.K. economy emerged okay. It didn't have a huge recession, and the stock market did okay. So for investors today, over the weekend, we had so many thinking the economy is going to completely fall off the rails after Wednesday.
Well, people are starting to say slowing growth and persistent inflation. So you put those together and you get the stagflation. Yeah, that's death for.
Yeah, I mean, there's a lot of distortions of the economy now, right? Because we know people are buying cars and wine ahead of tariffs, and that's creating inflation.
Hopefully, they're not doing it the same. Cars and the wine.
Do you think it's pushing up our growth numbers that we're seeing at this point, between retail sales and other places, or is it too small to distort things on that great of a level?
I think it's possible economists are only dialing in the negative consequences so far, but not the positive, because rates are down and gasoline's down, and there could be some pull forward of demand. So we might end up having better growth, so less stag, and maybe the inflation stuff is more distorting, and so it's not as stagflationary.
You've had some of your recent calls that turned out to be prescient, bullish calls had to do with inflation not being as bad as people feared. Is that still what you think? Because some of the numbers have at least given a head fake that maybe it's still around, and you throw in tariffs. We just heard what Goldman Sachs say, 0.5 point higher on the PCE than they thought previously, and 3.5 on the PCE is not going to allow the Fed to relax.
I mean, yeah, it's interesting because Goldman did raise their inflation forecast, but then they're talking about more rate cuts.
I know, which is because of growth concerns.
Yes, and I think we'll have a glimpse of what Fed Chair Powell's thinking because he's speaking Friday after the jobs report. And I do think that it remains a more dovish Fed than many expect. I mean, I think that's what was revealed after the March FOMC meeting. And not that I'm saying it's going to put a reversal of markets here, but I think investors are a little too scared heading into Wednesday.
Bitcoin's testing recent near-term lows, I guess, again. It's been under 80. It's not quite there yet. It definitely is a risk-off trade, and when the NASDAQ goes down, Bitcoin seems to go down. But it also really likes the idea of more Fed rate cuts or the Fed being more lenient. So if we get that on Friday, is this a decent time to be stacking?
I think so. You know,
You do, at 80.
Yeah, I think, you know, part of this was Bitcoin seasonally was just not going to be attractive until after March ends, and now we're finally exiting March. And so I think not only is the calendar looking better, but as you're saying, Fed and central banks are easing, QT's ending. I think that with positive Washington sort of tailwinds means I think Bitcoin can do well to the end of the year.
Right. People love it when I ask you what your year-end target is on Bitcoin.
Yeah,
Makes
and
people very excited.
yes, and I mean,
It's crazy high again.
I think it's still 150 or higher as possible.
Okay.
I know it doesn't feel like it, but once we get through this tariff and that agenda around tariffs, markets can look forward to things that could be positive.
So again, you know, as we really do kind of listen in and we hear these discussions ongoing from individuals that have been working around the financial space for a very long time. I mean, listen, we know how these markets typically react to peak fear or peak bullishness. We know typically the opposite happens. Now, we have been hearing from accounts like the Coinbase letter, and I've been putting a spotlight on them because there's a lot of great research coming out from some of these accounts. But the big issue that I'm seeing now is the same issue that I saw back in like 2022. Okay, we knew that FTX, for an example, collapsing around crypto and also even Luna, like that was peak bearishness. We knew that the market was oversold. We knew that something was going to, happen where we see a relief rally in the market or something. But at that same exact time, we saw accounts like the Coinbase letter, putting a spotlight on some bearish indicators that ultimately would have said, all right, well, you know what? Now that we have all of these, big events happening and we have, the stats in front of us, well, it looks like 2023 is going to be a very bearish year, right? But we actually know that 2023 was one of the most bullish years for crypto off of those lows. It was the start of the major impulse that got us to $100,000 plus. But on top of that, we have another post from the Coinbase letter talking about how the revenue on Wall Street for investment banking was set to post a 40% decline this year, the biggest decline on record, even worse than 2008. Now, again, this was back in 2022. And we already know what happened next. And today, now, I'm not taking shots. I'm just trying to tell you guys, a lot of these big accounts are getting very bearish because of what's been happening around these markets because of the trade war. I just feel like this trade war and I feel like the trade policy right now around, these tariffs, I think it's getting exaggerated. I think that it's getting blown out of proportion in a huge way. Now, I will say this. The Coinbase letter did say that they know that this has been priced in. They know that most of this has been priced in, as they say here, right? We believe most of this is already priced in, particularly with the recent drop in investor sentiment. Equity sentiment has collapsed. But they also believe that markets are also underpricing the effects of reciprocal tariffs on Trump's reciprocal tariffs. We expect to see new tariffs from the EU and Mexico as soon as April 3rd. We believe that this will impact 1.3 trillion. So again, the retaliation essentially from April 2nd could be significant. We don't know what's going to happen. Obviously, again, we're really kind of looking at stagflation as well. Everyone's betting big on the bear, right? Even if you go back to the recession, odds, 43% chance of a recession happening within, this year. It's kind of crazy, right? And I'm not trying to say oh yeah, the overall retaliation on these tariffs is not going to be anything to worry about. I think that they are a concern. They definitely are, especially concerned the fact that we did get an update regarding China, Japan, and South Korea agreeing to jointly respond to the US tariffs. We know what's happening here. Okay, we understand that this is not, bullish for the market. I just feel like a lot of this is getting blown out of proportion. I think that the markets are oversold. I think that the sentiment right now is completely killed around, crypto, around stocks. I just feel like a big reversal is going to happen. And it's going to happen when we least expect it. Now, are we prepared for April 2nd to be that reversal day? Well, listen, we're 24 hours away. A lot could change in 24 hours. I would ultimately give it the rest of the week. I would see where the market closes on Friday and go from there. Because again, we want more price data. This week is going to be volatile. We know that this week is going to be extremely volatile. So we take it one day at a time. And, we really kind of look at the price data. We zoom out. We really analyze it on a macro view as well. But until we get past April 2nd, we don't really know what's going to happen here. But in my opinion, I am agreeing with Tom Lee. Number one, I do think that Bitcoin can go to $150,000 this year. I think that crypto is going to be very bullish this year. I also think that stocks are going to be very bullish this year as well. I think that right now we just have to kind of weather the storm. I think everyone is getting very peak bearish because it's very easy to be, bearish at this current point. It's very hard to be bullish because of, the last 3 months. But, I do think that we are in for a very, very good overall move in this market where we do start to rebound off of the lows and we have that relief rally that will lead us to, breaking into a new all-time high territory on Bitcoin and across the board for a lot of the crypto space. So with that being said, I hope that you guys enjoyed this video. If you guys did, leave a like, subscribe, turn notifications on because I'm free content. You guys are more than welcome to follow me on Twitter and join the free Discord on the description below. And with that being said, guys, this has been Nick. Thanks for watching. Peace out.